Many welding companies are pricing their way to failure and don't even know it. Your overhead is adding up every single day, and some of the biggest expenses are hidden. If you're not accounting for them, it could sink your entire operation. Today, I'm going to go over how to calculate your minimum viable rate so you know where to start when pricing out your work. Hi, I'm Jess with Hood Time, a business management app for welding and fabrication companies. We first built this app as a tool to help manage our welding company, and now we're making it available for you to do the same. The foundational principles that I'm going to go over today are based on years of research and real-world application. Let's get started. What we're looking at here is the rate calculator feature in the Hood Time app. At the top, you can see our calculated minimum rates. This example shows about $170 hourly and $13.53 daily. Below that are 4 summary boxes showing from left to right total expenses, potential work hours, billable hours, and weather impact. On the left side, we have customizable parameters, which are work days per year, work hours per day, paid time off, work days lost due to weather, billable hours percentage, and our overhead markup percentage. On the right, we track all business expenses with their frequencies. Everything calculates in real time as we make changes. However, you do have to save your changes in the bottom left corner for them to be permanent. What we're building toward is this number at the top, your minimum hourly rate. This isn't your market rate or competitive rate. This is your survival threshold. So what exactly is a minimum rate? Simply put, it's what you need to charge to achieve your target financial goals. The math is straightforward. We take our total annual expenses, include our overhead markup, then divide by our billable hours for the year. To calculate this accurately, you need to know 4 key things: your business expenses, how much you want to pay yourself in salary, how much you want to mark up your overhead, and your realistic work capacity. Let's start with the parameters that determine your annual work capacity. The default values shown here represent realistic assumptions for most operations. Work days per year is set to 249. Here's how we got there. Start with 365 days, subtract 104 weekend days if you don't work weekends, subtract 11 federal holidays, and you're down to 250 days. We use 249 to be conservative for Presidential Inauguration Day every 4 years. Work hours per day is set to 8, a reasonable baseline, but some operations run 12-hour days, while others might only sustain 6 productive hours. Next, you need to account for paid time off. Our default is 18 days. This isn't optional if you want to avoid burnout. Even if you're a solo operation, you need to plan for vacation time, getting sick, and personal emergencies. 18 days is average, but adjust this to your reality. Please note that this calculator is designed for small operations, and the paid time off field here is for you, the business owner or operator. For employee PTO, you need to include that in your labor expenses. Now let's consider work days lost due to weather. Weather considerations are very important for welding operations, especially mobile work. And it isn't just rain we're talking about. It includes wind, extreme heat and cold, ice and snow. It can also affect you indirectly. For example, if your project is dependent on other trades completing their work first, if they get delayed due to weather, now you're delayed. Indoor shops might lose 3 to 5 days per year, while outdoor or mobile operations could lose 15 to 20 days, maybe more. Notice how this affects our calculations. In the weather impact summary box at the top, we show 80 hours yearly lost due to weather, reducing our available work time. Now let's talk about a critical concept that many businesses get completely wrong. They assume that all of their work hours are billable hours. The billable hours are the difference between the hours that you're working and the hours you can actually bill to the customer, represented as a percentage. Let's say you work 50 hours a week. How many of those hours can you really charge to customers? You might only be billing 30 to 35 hours worth of work that's reflected on invoices. The rest disappears into what we call business maintenance time. Think about your typical week. You might have equipment maintenance, organizing the shop, handling advertising, responding to inquiries, driving to quote jobs, internal paperwork, invoicing, banking, dealing with suppliers, meetings with your accountant or lawyer or insurance agent. In general, none of this time appears on customer invoices, but it's absolutely essential to running your business. if you don't account for this non-billable time in your rates, you're essentially working for free during these hours. Notice our summary boxes show 125 billable hours monthly, not the potential 147 work hours. The overhead markup percentage is set to 30% of your total overhead expenses. This is money the business keeps for growth, equipment replacement, emergency reserves, and future opportunities. 30% is a healthy baseline, but you might require a higher margin. Now let's look at the expenses that are already entered. These represent the core costs of running a welding business. In this example, we have consumables at $200 monthly for things like rods, wire, gas, discs, electrodes, safety equipment, etc. We have insurance at $5,000 yearly, and this could be general liability, property insurance, or vehicle coverage. If you're running a legitimate business, you need insurance, and don't forget workman's comp. This example figure is probably an underestimate, depending on the coverage you need. Labor costs shows $80,000 yearly for additional help. Make sure you include in this expense not only an employee's wages, but also workman's comp, taxes, and other expenses associated with having employees. Our owner-manager salary is at $75,000 yearly. This is you paying yourself as an employee. Whether you draw $50,000 or $100,000 annually, this goes into your expense calculation. Don't skip this. You should be paid separately from the company's profits. Rent shows $2,500 a month. Your workspace costs money, even if it's your home garage. Utilities at $250 a month covers electric, gas, water, internet, phone service, etc. These defaults are sample values and should be adjusted for your business. Now you might be thinking, wait, many of these expenses are tax write-offs. Shouldn't that affect my hourly rate calculation? You're right, most business expenses are tax deductible. However, we don't factor tax savings into this type of pricing model. This approach gives you a safety margin and ensures you're not dependent on tax strategies to stay profitable. Your business should be sustainable even without optimal tax planning. Please note that this is not financial advice, so be sure to consult with professionals. Now let's see how these principles work in practice. With our current setup, we're showing $169 per hour, but we're missing some common expenses that every business faces. Let me add equipment maintenance at $200 monthly. Notice the rate increases to $171 per hour. That might seem like a small change, but over 1,500 billable hours per year, that's an extra $3,000 in revenue we need to take in to cover that expense. Let's also add professional services like accounting and legal at $150 a month. Now, we're at about $173 per hour. Again, what looks like a modest increase represents close to another $3,000 annually that we need to make. What about marketing and advertising at $100 monthly? We're now close to $174 per hour. These aren't arbitrary additions, these are the real costs of owning a business. Each small monthly expense compounds into thousands of dollars annually that must be recovered through your rates. We still haven't added vehicle costs, software subscriptions, equipment depreciation and replacement, and tools. Let me add another $300 monthly in miscellaneous expenses. Now we're at $177 per hour. Look at what's happened. We've added realistic business expenses totaling $800 per month, which pushed our rate up about $7 per hour. Over a full year, that represents about $10,000 in additional revenue requirements that need to be included in our pricing. Now let's see how adjusting the parameters affects our minimum rate, and more importantly, what these changes mean for your annual revenue. Watch what happens when I increase weather days from 10 to 20. The rate moves from $177 to $185. That's $8 more per hour because we have the same fixed expenses spread out across fewer billable hours. Over the course of a year, those 10 additional weather days require about $11,500 extra that we need to make to cover our expenses. Let's move on to billable hours. Maybe after doing some time studies, we found that we aren't as efficient as we thought. Let me drop the billable hours percentage from 85 to 75%. We're now at $210 per hour. This is a significant jump because we're spreading the same costs over substantially fewer billable hours. That 10% decrease in billable efficiency requires a $25 per hour rate increase to cover these expenses shown here. That's over $31,000 in additional annual revenue requirements. This demonstrates why accurate time tracking and honest assessment of your billable hours is absolutely critical for sustainable pricing. If you offer both shop and mobile welding, don't overcomplicate it. Include the mobile expenses in your minimum hourly rate. Most of these expenses, such as insurance, still exist even when you're not conducting mobile operations. Some shops charge extra for mobile work, but with this technique, you don't have to, as long as you include port-to-port travel time in your billing. Look at the journey we just took. We started at $169 per hour and ended at $210. That's about a $40 difference, which over the total billable hours for the year represents about $50,000 in annual revenue. This isn't about charging more. It's about understanding what you actually need to charge to stay in business. This tool doesn't set your market rates, it reveals your survival threshold. Whether you bid by the job, charge hourly, price per foot or per part, this foundation is non-negotiable. You can charge more than your minimum viable rate, but you cannot sustainably charge less. The calculator shows you exactly why your competitor charging $65 an hour isn't accounting for all of their costs and may be slowly putting themselves out of business. Accurate pricing is essential for the survival and growth of your company. Use the Hood Time Rate Calculator and see where you stand. Also, be sure to check out the app overview video, where you can see the many other features that Hood Time has that can help you manage your business. Then head over to hoodtimeapp.com and start your free trial. Don't forget to like and subscribe so you can see when we post new content. See you next time!